Hello everyone and welcome to the Fintelligent Investor channel. I am CA Pratiksha Pai. Today we are going to discuss yet another important aspect in your personal finance journey, which is whether the banks can change the FD interest rates after you have opened an FD with the bank. Let's dive into this video. But before that, let me give a shout out to Nikita, whose YouTube username is Nikki B. Why I am giving this shout out is because in one of my previous videos, I had at one point of time in the video, I told that if you watched the video till now, just comment Fintelligent, and she had commented that word, and so she got a shout out in this video. If you also want a shout out in my next video, be with me till the end of this video, and I will be telling some words within this video which I will ask you to put in the comment box. Put those words in the comment box and you too can get a shout out from me in my next video. With this, let us dive into today's topic and let us talk about this one investing avenue, which is one of the most favorite investing avenues for our parents' generation. If you're an 80s or a 90s born kid, then definitely we would have seen that our parents love FDs as an investing option. And why did our parents love FDs as an investing or saving option? Because FDs were one of the safest options out there. It is intangible, nobody can steal it, you know it's safe with the banks, and you are getting a good return from it, which is stable return. So this is why, this most probably could be the reason why our parents' generations used to love FDs, that is fixed deposits, and used to maintain FDs as a form of savings and investments. From there till now, we have a huge lot of options. We have REITs to invest in real estate. We have online form of gold SGBs. We have better and evolved versions of investing, like share markets is there, mutual funds is there, and it's not very difficult. Every investment happens in a click. So nowadays, of course, we have a lot of options, but still, even today, FD is one of the investing options out there, and many of us would also have kept certain FDs for certain end goals. And now today we will be discussing that once you keep an FD, can the bank then go ahead and change the interest rate, either increase it or decrease it, and will this changed rate be applicable to you? So as we know, for our parents' generation as well as today's generation, fixed deposit is one of the safe ways of saving your money. So if you're with me till here, comment the word safe in the comments. So before knowing whether a changed interest rate is applicable, first let us understand what is an FD very quickly. So this is a deposit that you make with a bank or with a post office for a fixed tenure of time at a rate of interest which you know beforehand. See, FDs are called as low risk stable returns because you know the rate of return, rate of interest beforehand. The rate is stable and it is known beforehand. That is why in an FD, why do people opt for FD? Those people who do not have a bigger risk appetite, who want to have stable returns, they opt for FD because the rate of interest is known beforehand, point number one. Plus, for whatever FDs you keep with the bank or with the post office, there is a stability to that amount. At least the capital you will not lose. You will also get a proper stable return on it. And there is a DICGC cover of rupees 5 lakhs per bank. So up to 5 lakhs at least, your FDs are safe with any particular bank. So if you are with me till here, then comment the word FD in the comment box. And please understand that fixed deposit is where you make a deposit for a certain tenure of time. And in that tenure, your money is locked with the bank or with the post office. In return for keeping your money locked, they give you a return which is a particular rate of interest on the amount that you have maintained based on the tenure for which you have maintained, and that rate of interest is known to you even before you open the FD. Now the main point, can the banks change the FD interest rate after you open an FD with the bank. See, as far as banks are concerned, they can change the FD interest rate at any time depending on the base rate changes by the RBI. Okay? So, FD interest rate, understand this, FD interest rate by the bank can be changed at any time. But rates cannot be changed for existing FDs till they reach their maturity. So, for an example, if you have maintained an FD at 8%, for example, and then the banks change the rate to 7.5%, they cannot tell you that we will give you just 7.5%. They have to give you your 8% interest till your FD becomes mature. However, after maturity, when your FD goes for renewal, then the changed interest rate will be applicable to your FD. Also, when the banks do these FD interest rate changes, whatever FDs are opened after this interest rate changes, for them, of course, the new rate will be applicable. So, please understand this point. For existing FDs, the interest rate cannot be changed. For new FDs which are made after the interest rate changes, the new rate will apply. For the existing FDs, till their maturity, they will be at the older rate of interest which was promised to them when they opened the FD. And when they reach the maturity and they go for a renewal, that point of time, the new rate of interest will be applicable. Okay, so if you are here with me till now, then comment the word renewal in the comment box so that I know that you have watched the video till here. Now comes the next part, which is most important. What happens if the FD interest rates increase after you have opened the FD? So as an example, let me tell you like this. You opened an FD at 8% interest, but after 1 year, maybe you have opened an FD for 5 years, but after 1 year, the interest rate becomes 9%. Then what will you do? Because it won't change for you, because FD interest rate changes are not applicable to existing deposits. So what can you do at that point in time? Should you wait 4 years at 8%? And then when you go for a renewal after the maturity, after 4 years, 4 more years, then you can get the benefit of that 1% additional rate? Or can you do something today by which you can get the additional return of 1% due to the changes in FD interest rates? Let's see. See, when an FD interest rate increases, you can choose to do premature withdrawal and keep the FD afresh at the increased rate of interest. Okay, which means you had kept the FD for 5 years. Okay, after 1 year, the interest rates increased. Will you wait 4 more years? No. What you will tell that? I will do a premature withdrawal of my FD today, which means I will break my FD today and I will do a premature withdrawal and I will keep my FD freshly for the increased rate. Now, when you do a premature withdrawal, there is a penalty involved. There is a small penalty involved. Why? Because when you say a bank that I will keep my money with you for 5 years, the bank will lend it to someone and earn interest from that and pay you your FD interest rate. But when you are saying that premature withdrawal, then you have to undergo a penalty. What is that penalty? That penalty is that of course, after you break your FD, after you do premature withdrawal, for the rest of the period, anyways, they don't have to pay you interest for that particular FD. You will make a new FD, you will get a increased interest rate. That's a different issue. But as a penalty, what the bank will do is whatever interest you have earned from the FD start date till the premature withdrawal date, the bank will minus 1% and then give you the rest of the returns. Which, in other words, means that if you had opened an FD at 8% interest for 5 years, but after 1 year, you saw that the FD interest rate has increased. So, after 1 year, you will do a premature withdrawal. What will bank say? We will give you the returns. We will give you the returns for that 1 year that you kept the money with us. But from the start date till your premature withdrawal date, which is 1 year, we will not give you 8%, but we will give you just 7%. So the penalty is the interest earned from the start date till the date of premature withdrawal minus 1%. But what will happen if after you open the FD, the interest rate drops? So if you open the FD for 5 years at 8% interest rate, and after 1 year, if the FD interest rate changes to 7%, then what will you do? Then, of course, you will not do anything. You will allow your FD to complete the next 4 years, and you will wait for the next 4 years. By the time you reach maturity, for that entire 5-year duration, you will still be able to get 8% interest rate of interest, even if after 1 year of your FD, the interest had fallen down to 7%. So the base point is that after you open an FD, if the interest rate falls, then don't do anything. Just allow your FD to reach its maturity. Now, next important aspect in this particular discussion is that how fast should you decide whether you need to keep your FD till maturity or go for a premature withdrawal in order to get the benefit of an increased interest rate. See, after you open an FD, if the interest rate increases, and let's say you have just a few months left until the maturity. So what you will think that, okay, only few months are left now till the maturity of this FD. So let me wait. Anyways, after maturity, when I go for renewal, I can take the benefit of this increased rate. But by the time your FD matures, that rate might again fall. If you are opened an FD for 8% and another 2-3 months are remaining, or say 4-5 months are remaining for your FD to mature, and today the interest rate goes to 9%. So what you will think that, okay, another 4-5 months now, let me just wait. And when it matures and when I go for renewal, I'll keep it at 9%. But in another 4-5 months, it may go down to 6.5. Then what will you do? Because today, if you premature withdrawal, if you do from 8%, what will you lose? 1%. Still you will get 7%, and you will keep the FD and renew it and keep it at 9%. But if you wait for another 4-5 months, what will happen? You will get 8% over here. But the new FD, which you keep after renewing, might be for 6.5%. Okay, so you have to be very sure, because these FD rate changes nowadays, everything is very dynamic, and these rate changes are based on the base rate fluctuations by the RBI. So sometimes it can be very quick that it can even be in few weeks time, forget months. So today the interest rate increases, maybe in a few weeks it will again decrease back. So you have to take decisions fast. Like if the FD rate increases, you have to be smart enough to think that, okay, what will be my penalty if I do a premature withdrawal? And is that good enough for me to do a premature withdrawal and go and take this increased rate benefit? Because even if you wait for a few months, you might end up renewing your FD for a much lower interest rate than what you would have lost if you had incurred the penalty of a premature withdrawal. If you have watched the video till here, comment quick decision and let me know in the comments that you have watched the video till here. So to give a summary of this video, fixed deposit is where you keep your money locked in for a specific tenure of time at an interest rate which you know beforehand and which is stable. After you open an FD, no matter what interest rate changes happen, whether increase or decrease, it does not affect any existing FDs. But if the rate has increased, it does not affect the existing FDs, but it is only applicable to FDs which are opened after the interest rate changes. And for existing FDs, it will be only applicable after they mature and go for a renewal. If there is an increase in the FD interest rate, you can consider going for a premature withdrawal after getting a penalty of minus 1% of the FD interest rate for the period of the FD start date till the premature withdrawal date, and then you can immediately renew it for the increased interest rate. And finally, when you want to go for a premature withdrawal on account of, the FD interest rates getting increased, then such decisions should be quick, because these interest rates might again fall by the time your FD reaches maturity, and it would be better if you had gone for a premature withdrawal and renewed the FD for an increased rate of interest. If you have watched the video till here, my big thanks to you. Please like the video, share it with your friends and family, and consider subscribing to our channel so that we can come up with more and more videos like this. I'll be back with another interesting video. Till then, thank you and goodbye.